guys, this is Brent Abernathy. Welcome to the Monday Family First Life Gulf Coast team training call. Hope everybody is having a great day so far, getting your day started off right, booking a bunch of appointments this morning. So for today's call, I'm excited about it. Got a special guest on the line, somebody I care about a lot and who's been with me for about, 3 years now. And so I got Tyler Sagal on the call with us, and Ty's got a lot of experience in the topic that kind of want to talk a little bit about today. And obviously Ty has helped a lot of people in this business and doing things the right way, a genuine heart as far as taking care of our clients, putting our clients first. And that's one of the things I want to talk about today, because I've gotten a lot of phone calls this past week and talked to a lot of agents in regards to how to handle things inside the home when somebody already has a policy, right? When they've already got insurance, and what that process looks like how do we determine what type of coverage they have? When we're looking at the policy, how do we navigate, the questions, finding out whether it's a good one, a bad one, is it something that we can do better with, all that sort of stuff. And I remember, Ty, and I don't know if you were the same way, but when I first started in the business, 11 years ago, I remember hoping every single lead I called and every appointment I booked, I'd be hoping, God, I hope I show up and they don't have insurance. That'll be an easy one, right? And what I've come to find out is a lot of times it's actually better if they already have insurance, because we have such great carriers, such great products. We have such great training. So we have an understanding of, how to help the clients better than a lot of insurance agents in our space. But also, if they already have insurance, it proves that they are someone who buys insurance. And, so all those things together, I mean, if I look back, I don't know, it's purely a guess, but I bet you 75, 80%, maybe even more of that, the amount of insurance that I sold in the 11 years probably came to people that already had coverage. And so walk everybody through, Ty, your processes and kind of what you're looking for, how you go about finding out if they do have insurance. And once you do find out they have it, what sort of questions and what does that process look like in determining whether or not we're going to help get a better policy or just add on to it? What does that look like for you?
So one of the big things, as you go through the financial inventory sheet, at the very end, there's always that question, do you have anything that acts like life insurance? Do you have life insurance, but do you have anything else that acts like it? If they do say, yep, I have a life insurance policy, I say, awesome. Do you have anything outside of your job that you actually own? Like those words right there that you actually own will kind of get them to stop and think for a second, because obviously we all know group insurance, you don't own that, right? So if they say, yep, I have something that I actually own, I say, can you please go grab that real quick just so I can make sure I'm doing the best thing for you guys? And I don't say, I don't, in the beginning, I would always kind of like, could you go grab it, please? And I would kind of it was kind of weird, but now I'm like, go grab that, please, so I can make sure I'm helping the best. Then I'm kind of right back to where I was. So the main things, so there's really 3 different types of policies out there that you kind of got to be aware of, right? Like your standard whole life policy, right in the beginning of the page or right in the policy, it will say whole life to age 121 or age 100. And you got to look, there's always a couple, I think it's like the second or third page in, usually, if you look, there's always a chart, right? And it'll show you the policy year of a 1, 2, 3, 4, 5, 6, and so on. And then it will say face amount or death benefit, right? And that's where you can always spot like a graded policy or a modified where the full death benefit is not payable in that first year, 2, 3, sometimes even 4 years. They don't pay that full face amount. So usually if it's within the first 2, that full death benefit is not on that first policy year, I'm always asking, I learned this one from John Wetmore's got a video out there. He says, "Are you sick or are you in bad health?" And sometimes people are like, "No, what do you mean?" It's like, well, you're in a 2-year waiting period. This means like if you died yesterday, your family's only getting the money paid in plus the interest, or they're getting a modified death benefit. Did you know that? Got it. Right. Okay. And then that's the whole life route. Right. And then you have your terms where you'll hear people go, I got 300,000 and I'm paying $50 a month. Right. And on those, I'm kind of like, sometimes it could be an accidental, where if you say, go get that policy, a lot of the times it will say accidental death right on the front of it. Mm-hmm. Right. But the main thing is to have these people get their policies out. So you have ammo, if you will, to just say, hey, this is in writing. This is not me. This is actually the insurance company saying it. Right. But do you want me to, there's 2 more that I want to run through, but do you have any? Okay.
Well,
okay.
I mean, and here's the thing too. I do want everybody to understand, like, if you're not sure what it is that you're looking at, you can obviously always call somebody from inside the home, whether it's the agent hotline, whether it's, your manager, whoever it might be. But also, and I had this one happen actually yesterday, Ty. I had an agent call me, and they were looking at a $5,000 whole life policy that the client already had. And I said, they didn't know if it was a good policy or not. And I said, okay, when did the client get it? The client was 62 now. And the agent said, well, they got it when they were 60. I said, okay, how much are they paying on it? And it was like, I don't know, it was like $19 a month. And so all I did real quick, I didn't have to know much more than that. I just put into my rate calculator with like Eagle Premier or Mutual of Omaha, Living Promise. I just figured it out how much a 60-year-old non-tobacco user for $5,000 worth of coverage as the female was. And it was like $18 a month. So that told me, because I know what Living Promise is, that it's a whole life that's guaranteed to never change. It's going to be there until the day they die, no matter how they die. So that told me that policy that the client had was a good policy, right? It's not graded. It's not going to end on them at any time. The rates aren't going up, right? Because everything within insurance, if you're comparing apples to apples, everything is priced very similarly, right? So what you're looking for, what would have been a tip-off in that situation would have been, say, if I looked up, a $5,000 whole life for a 60-year-old female non-tobacco, and it shows up as $19 a month on my end, but yet they've got that $5,000 policy and they're paying $7 a month, or they're paying $48 a month. Right? There's a big gap there. So that would tell me there's something different about it. Does that make sense?
100%. And like you said, you have to have the intent of always doing right by the client. Like, here's an example. The other night, it was a 3-month-old internet lead. Called her. She already got life insurance. I'm like, perfect. I could swing by, see if I can put you in a better spot. If I can't, I am on my way. You have my word. Okay. Show up. She got a policy. It was a modified policy from 4 years ago. So the full death benefit, actually, I've never seen one this modified. Like, it was 4-year till 5,000. She was paying like $45 a month. And I was like, are you sick? Like, what's wrong? Like, do you have something major going on? She goes, no, nothing at all. And it had to have been a captive agent that had literally one company, one product to sell. Basically, we doubled their coverage and like saved her $5 a month, right? Oh. But here's the thing: we always got to do right by the client. Is her husband actually had a Transamerica policy, and I looked at it; everything was good, and he got prescribed oxygen like a year ago. So there's no going back there. He already had a really solid policy. Right. And I said, yours, we're taking care of yours. His, you do not touch. You don't let anybody tell you if that one's solid. Leave it. Mm-hmm. Right. Now, the one, Brent, that I think we both kind of know is the universal life, right? The flexible premium adjustable life, where those are the ones that I remember. There was a time that I called you in a home, and you pretty much said, "Put me on speakerphone. I'll take care of this one." And because I had no idea, and I get this too, where where a couple of times agents will call and they'll say, "Hey, I'm sitting with Bob. Bob's 67. He's got a whole life, right? A whole life, and he's got a whole life for 150, and he's paying $86 a month, right? There's a tip off right there, like you mentioned, like something might not be right there." And what I always tell agents is like, okay, open that first page. If it says flexible premium, adjustable life, that's usually the phrase or the verbiage that is used, right? Now, what you got to understand on something like that is when people say they have a significant amount of whole life, because we all know kind of our whole life rates where it's a straight level whole life. And if they're showing 150,000 for $80 a month, it's like something might not be right there, right? And basically, guys, for those who may not understand how flexible premium or universal life works, is basically every single year your cost of insurance goes up, right? So I could go to Brent and say, "Hey, Brent, I can get you $200,000 for $30 a month. That sounds great, and it's whole life, right? It's whole life." Because people always love that, right? But what happens is every single year that Brent ages, we won't talk about how his age, because I'm in front of camera, but as his age
goes, it's getting up there quickly,
right? And the cost of insurance goes up as you get older. So as he gets older, he's still paying that $30 a month, but that as that cost of insurance goes up, instead of him paying 30 now, right? He'll still pay the 30, but the cost will actually go to 40. So as he pays his 30, that extra $10 is coming from this cash value account within the policy. Mm-hmm. And when that cash value, what happens is if it hits zero, the insurance company is going to send these clients a bill saying, "Hey, we need like $200 a month for your insurance. Otherwise it's going to lapse," right? Mm-hmm. A lot of times agents will sell it in a not so ethical way. You can sell it on the whole life part of it, but eventually that thing will expire. So, and I say that to say this is when you get the policies out and you see something like that, I always ask, do you get a statement from the company each year? And sometimes they'll say yes, sometimes no. Do you know how much cash value is in it, right? And if it's a pretty significant amount, I'll leave it. But what you can look at on those ones, again, is those tables. Like whenever you get a policy out, I always look at what type it is, and then you flip through a couple pages and you'll see a chart of a bunch of numbers, right? You'll see the policy year, and sometimes on these flexible premiums, you'll see the modal factor of the change in premium. It'll be like a little decimal. And each year that decimal will get bigger and bigger and bigger and bigger and bigger. And I'll always say to clients, like, this right here is showing how much your rate is going up each year, right? Mm-hmm. And a lot of times, and Brent, I learned this from you, along with a lot of other things, but like when you'd see policies like that in the past, you would just like jump on it.
Right? I was going to ask you that. Yeah. So pause for a second, because this type of policy you run into a lot, but you also run into a lot, people have 5-year renewable term policies that increase in cost every 5 years, or maybe they have a term policy that is good for another 10 years. And then at that point, the rate goes from $100 a month up to $1,200 a month or whatever. And so when you see something where in your mind, you're like, oh my gosh, this is, for lack of a better term, this is like a layup. This is a gimme. This is like somebody's putting a ball on a tee for me, and all I got to do is it's a done deal, right? You know that we can really help a client out. I know I used to make the mistake of jumping to conclusions too fast and basically going right for it and saying, okay, well, obviously we can do, it's so obvious to us as agents, right? But sometimes we can jump at it too quick and the client doesn't get it or whatever. So when you get to that point where we definitely have a problem with this policy they have, and we found the hole in the dam, and now we're going to show them the solution on how to plug it up. How do you go about that? Because it's important that agents understand sometimes you need to slow down a little bit. Yep. Right. So how do you go about that?
what would be, give me an example of a policy. Like, let's say you have what kind of product?
Let's say I've got a term policy that's good for another 8 years, and then after that, basically the term runs out in 8 years. Okay, so
yeah, so I got the policy, right? So Brent, when you got this put in place, what exactly why did you get this put in place for your family?
Well, I got it for, income replacements. It was about the time I had kids or my wife and I had kids. And so I felt like needed income replacement in case I died. She would have some money to help raise the kids, things like that.
Sure. And do you have any other current policies besides this one right here?
No.
Okay. So Brent, it was definitely a good idea getting this put in place, as your family definitely needs this. But what's going to happen here when you got this put in place? Were you aware that this thing was going to expire at age 55?
No.
Okay, because this is a 20-year term. So basically, what happens is you're paying the same rate for 20 years, but after 20 years, so in 8 years from now, you're going to have two options. Right, assuming that your health stays the same, right? In 8 years from now, you're either going to not have any more insurance, right? Or the insurance companies is going to quadruple, actually tenfold your payment. And you can see it right here in the policy. You see after policy year 8, how much you're paying. You're paying $860 a year now, right? And that ninth year, the rates go to $20,000.
Right, that's crazy. So, yeah.
It is. So, Brent, what the best idea? I would keep this right now the way it is, but I think we should definitely look at getting something permanent in place now while your health is still good, right? Because we don't know what may happen in 7 years from now. You may have a heart attack and survive it, but now it's a lot harder getting insurance going forward. Does that make sense?
Yeah, absolutely.
So what we should do is we should look at getting something permanent. That way you don't have to worry about getting the insurance after that thing expires while you're still in good health and you're 42. Right. So,
and so there's a big difference in that. See, what I used to do, Ty, is I used to say, okay, you see this right here. It's going to end in 8 years, right? You're not going to have any insurance in place. And I jumped the gun. Right. Mm-hmm. And what you're doing is you're slowing down and you're asking questions. And I also used to ask, I did something very similar to what you were just talking about. And I would also ask them something to the effect of, so Ty, just so I understand, like, what are your plans in 8 years when this runs out? What do you have in place to cover your wife and kids at that point? Right. And it's the same thing, but it's just we got to slow down and ask those questions and educate them in those situations. That makes sense?
Yep, big time. I think that's the big thing right there is slowing down. A lot of agents say, "How do you know all this stuff?" It's like run a lot of appointments and ask questions. People go, "How do you know about Universal?" I'm like, I call insurance companies and ask them questions a lot. Mm-hmm. When I come across scenarios. I learned a lot from you just, after appointments, I'd call and be like, hey, this is what I came across. So this is what this policy said. What does that mean? Right. And you just learn as you go. Right. But it's taking that first step and opening up policies and just reading them and learning how some of these policies are structured. Right. Mm-hmm. Because in fine print, these insurance companies they owe you nothing. Right. It's a contract. So learn to read it. And it's very simple.
Yeah. Let me ask you this too, because this is something I've been hearing a lot. We've got so many new agents out in the field right now, which is obviously a good thing. But I'm hearing a lot of situations like this. They book an appointment with a lead. They go sit with the lead. After the appointment's over, they call and say, well, yeah, they already had insurance and I couldn't touch the price that they had, right? They got it in place 5 years ago and I couldn't touch the price they had. So I wasn't able to make a sale. Mm-hmm. What are your thoughts on that? Like, what would your advice to those agents that are running into stuff like that? Like, what would you say to those agents?
I do mean it. It's like, if you're in a good spot, I'll leave it. Right. But I think a lot of the times, like that right there is kind of a quote mentality, right? It's, if they already have insurance, that's awesome. But why did you fill this form out again for more insurance?
There you go.
Right. It's like they're still asking for help. And even if they do have insurance, that's, again, awesome. But kill them on paper, show them what it's going to look like. Yeah, I already have 50,000. I have a mortgage and 2 kids. Okay. 50,000, right? We know that's not that much coverage for a mortgage and 2 kids. Even a final expense coverage, like you're looking at 15, 20,000. If you want to leave extra money behind, that's going to last them a year. Right. So it's find out what they have, but again, they fill the form out for a reason. So they want more.
Yeah. If they have something that's been in place for a year, 2 years, 5 years, 10 years, whatever, that was already there when they filled the form out. They knew they had that. So we got to get better at asking questions and diving down into, okay, well, like, you can't let a client use that as an excuse to not get insurance now, because they already had that when they asked for our help, right? So we got to dig down into why. Okay, so why did you fill this out now? Like, what's the reason? We can't use that because you already had that, right?
Yep.
Now, if they just got it in place a month ago or whatever, well, yeah, I mean, it might be more of a situation where they had filled out multiple different forms or whatever around the same time. We just got to figure out if we can, help them and put them in a better position. But it's not just about, I love what you said. We aren't quote givers, right? It's not about just beating the price that they have already. It's about the value that we bring, as far as educating them on the policies they currently have, or the value that we bring to be able to take their money that they're spending on policies that won't necessarily be there when they die, and actually having them put it into policies that will be there when they die. Right? That makes sense?
100%.
You got anything else to add to it? Because I want to ask you one other question, but anything else kind of on this topic, as far as, and you've done such a good job. You have done a good job of calling along the way of, you guys will, everybody will understand that if you run a bunch of appointments, you'll know real quick, like, what types of policies, and you'll see it. It's not real hard to understand, but you did a good job early on of asking questions, how to navigate certain situations. You would call their existing companies that they had policies with, and and find out specifically what the client had. So you did, and you also called the insurance carriers that we work with and asked questions a lot too. You treated it like a business, and you seek the knowledge, and that's helped you. But anything else you want to add on this?
Well, and similar to what Gabe said last week on this call was, he's like, you're in the profession, like, your job is to produce insurance. So with that being said, learn about it, perfect your craft, get good at this thing, research, Google, YouTube, invest. I mean, there's so many different things out there, along with everything that FFL has to provide for training, but treat it like it's your own, and learn about it. Right. But I will say this too about the policies is, if you don't know what you're looking at, again, call the company. Like, that's always one of my favorite things to do too, is because you might not listen to me, right? At that point, I was a 21-year-old come in their house. How about you listen to the actual insurance company issuing this contract? Say, hey, insurance company X, how long is this coverage good for? And they'll be like, well, 3 more years. And if they keep paying that same rate, or when will this rate go up? What will it go up to? When will this expire? And they'll tell you right then and there. Right. That always kind of gets the client to open their eyes too. Again, we're doing it for the client, so it's always good to call that company.
Absolutely. And don't be scared. Like, I think that's a big thing with new agents is we don't have we don't have a confidence about like we are blessed to have a bunch of great carriers, have a bunch of great products, and we have, from a training standpoint and a support standpoint, anybody that's on this call and listening to this call, there's a real good chance you are better than most people in the industry. Unfortunately, it is that way. There's a lot of people in this industry, Ty, that maybe don't know better. Maybe they haven't been trained better. And so they sell off of price, right? And because of that, what they do is they put people a lot of times in these short-term policies, or like you said, underfunded universal life policies or whatever. And that's not their fault. That's just, they didn't know any better. Right. But it might not be the best for the client. So have the confidence in knowing that it's not something to be scared from. It's not a bad thing if people have policies already, because that's where some of our true value comes into play for these people. So real quick, before we wrap up, I know we've got conference coming up down in Miami, really about 10 days away. It's next Thursday. So it's really when everything gets kicked off. I know most people will be flying down there on Wednesday. So I know you've been through 2 or 3 of these, now, and I know it's made a big impact on your business. So if there's somebody out here listening right now who has not made the decision to get down to Miami for convention, what would you say to them? Like what has it meant to your business? Give them an example or two.
I think my favorite analogy is if I told you there was a bag of cash for $100,000 waiting there with your name on it, would you do whatever it took to get there? Right? You know you're going to make the money if you just go and get it. Just you have to go. I think my first year I remember my parents were like, you need to be selling insurance. You need to be on the field. I'm like, at this point, I really didn't know. Because, when I first started, I was kind of lollygagging it, but understatement, right?
Not kind of. Let's be, let's be honest.
Yes. But I just told him like this, but this is going to help me. It's going to help here. It's going to help my mindset. Right. It's like, would you go to a dart league at the bar with Bob and Joe, right, just to learn how to play darts, or would you go learn from the best dart player that ever existed, right? It's like, I'm saying it's just like, go listen to the people that are having a lot of success in what they're doing, that have proven it, that have made a lot of impact on people's lives and also made a lot of money doing this. Go listen to them, go meet them, go network with them, go shake their hand. I remember it was with Evan, I think 2 years ago. He told us story the other day on the call. He goes, we were sitting in an elevator with somebody and he's like, this guy's like, I have an organization doing 40 grand. And we're like, let's go smoke this guy. Right. But it's like, get around people that are doing it and having success. It'll change it. You get around like-minded people that are all on the same mission. It's for this, right? Mm-hmm. You'll make the money back. I promise. Just go there. It'll help your business. It'll change the way you think too, which is everything in this business.
Yeah. And allow you to meet some people that you can network with and learn from. It's your growth from day one. I remember it like it was yesterday, the first conference that you went to in Vegas, I believe it was. And I remember just watching you and you, just the light bulb starting to come on, things like that, as far as maybe some things you could change and to make your business better. And I've also seen from year to year how your confidence has grown. Like that first year, you were a little bit timid as far as, talking to new people and asking questions, things like that. But the more you've stretched yourself and gotten around people at a different income level or people who are better than you are, it's built your own confidence. And now it's nothing to it to go talk to this person, go talk to that person, go ask questions, right? And that's just, it's from stretching yourself and getting around other people and learning from them. So it's pretty cool. It's pretty cool for me to see. I do know that.
Long ways.
Yeah.
Long ways to go.
Yeah, exactly. We're always growing. We're always getting better every year. And I'm proud of you, man, for where you are at this point in the business, but I know we got a lot of awesome things going on within the business. And I know this is going to be a big year, obviously, for you and your team, the Titans team. And so I appreciate you getting on and sharing this stuff with everybody today. It's important. It is something you run into a lot, but it's nothing to be scared of. You should want the people that you go see to already have insurance, because that gives you plenty of opportunities to help them. But don't be fooled. They filled out the lead and the request for a reason, because they already had that in place when they filled it out. So don't let them use that against you. So appreciate you getting on and talking about this subject, man. Hopefully it helps a few agents out there, go out and make more sales and help clients in a better way. All right. That's what this thing's all about, right?
Yes, sir.
Absolutely. All right, buddy. Well, listen, I appreciate it. You guys have a great rest of the day. If you have not registered for convention, go ahead and get registered for convention. I saw the other day where there's already 14,000 people there. It's going to be in the stadium, the baseball stadium down in Miami. And get your plane flights, get your hotel set up, all that stuff. And we'll talk a little bit more about that next Monday. But look forward to seeing a lot of you guys very, very soon. Talk to you guys later. Bye-bye.